Today we're going to talk about two stocks for Money Monday. We're going to talk about a dividend income, monthly dividend income producing closed-end fund. I just want to bring it to your attention because it's hit my radar. And I'll tell you what, I actually think I'm going to make an investment. I'm also going to show you a stock today that I have invested in, both owning the shares and a poor man's covered call. So sit back, grab your coffee. I'm hoping we can get this done in 10 minutes. Let's go ahead and talk about the closed-end fund first. We're talking about Eaton Advanced Tax Managed Global Buy Right Opportunities Fund, or ETW. Love closed-end funds. I love the buy right closed-end funds. See, remember what a closed-end fund is. Remember, it's a company like Eaton. They're going to create a fund, and what they're going to do is they're going to go IPO. And all that money they generate from the IPO, they're going to use to generate the monthly dividend they're going to give to their investors. Now, it's a closed-end fund because there's no more money that can be added. Now, Wall Street loves this because it's steady Eddie money for their clients. Okay, so closed-end funds are used to supplement retirees' income, and because they're largely distributed monthly, oh man, Wall Street loves getting their clients in closed-end funds. I like Eaton closed-end funds. I own EOS and ETV. Both are buy right covered call closed-end funds. So what does that mean? When they go IPO and they get that huge basket of money, they put together a team that uses stocks based on the mission statement to generate premiums through covered call rights, buy rights. And all they do is buy the stock, write the covered call. Buy the stock, write the covered call. They are absolutely machines in this process. And usually in an up market where call premiums are higher, these closed-end funds will go higher. As you could see with ETW, try to keep this straight, ETW, I own ETV and EOS, okay? Notice as the stock market's rallying, right, as it's rallying, so is ETW, right? Because its purpose is to buy stocks and then write calls, right? Calls against the shares, and they're generating larger call premiums because the stock market's going higher. And as the stock market falls, the inverse happens. Makes sense, right? Now, what's the dividend look like? Well, for years, they had paid 7 cents. You could bank on that 7 cents every single month. Well, notice recently that they cut their dividend. Okay, so they cut their dividend to basically 6 cents. Okay, so I think that's in accordance with the stock market falling, right? So the buy and write premium profit is not enough to cover that 7 cents per month. So they're proactive in cutting the dividend to meet their monthly goal. Yeah, they cut it a little bit over a penny per share. Well, Wall Street didn't like that. I mean, look at this. Wall Street rips this thing, and sure enough, you could see how Wall Street just absolutely works this thing, and it's now trading at 776. So these are the opportunities, because what I'm going to tell you is this. Chai and CHY, closed-end funds I've held for years, they too had to cut their dividends when the Fed started raising interest rates. Chai and CHY derive their income from selling bonds, basically selling debt. Well, when that debt gets more expensive, they were proactive and cut their dividend. Ultimately, what happens is when the market shifts, they come back and they restore that dividend. So when they were paying 10 cents and they dropped it down to 8 cents, 8.5 cents, Wall Street killed them just like they did here with Eaton, ETW. When the markets restored and those interest rates stabilized, they were able to make some money. They restored the dividend, and now Chai and CHY are paying that 9.5 cents. I think even CHY is paying a dime now. Okay, so this might be that short-term correction in ETW. Wall Street peels back, right? They don't like that, man. Wall Street does not like that closed-end funds change their monthly dividend distribution. And what's going to happen is the buyers are going to come back. Okay, because at the end of the day, this thing has a track record of producing dividends for years. Okay, although this might not be paying the 10% it was, okay, clearly cash on cash invested on a monthly dividend distribution, This is beating Wall Street. I know the S&P 500 is down damn near 19% this year. You would have found yourself with the shares much higher. Yes, you would have bought the shares much higher at the beginning of this year, and you would have felt down. But here's the thing. Closed-end funds, we don't look at the share price. Why? All we care about is the fat dividend that we receive every single month. And if you get lucky that this thing rallies and moves higher, say $1, $2, you could say, okay, I made $1, $2 on the stock move. I could divide that out monthly, and there is my annual monthly dividend income, and I don't have to hold the shares. Something to think about. I'm watching ETW right now because I believe Wall Street peeled this off because they changed the dividend. And what's going to happen is it's going to stabilize. And as that market goes a little bit higher into the new year, I'll tell you what, ETW being a buy right closed-end fund, they're going to profit from that. And if the markets can stabilize and continue to go higher, look for ETW to reinstate their 7-cent dividend. And this thing's going to actually find itself back to normal trading. CHY did it, CHI did it. But hey, nobody pays me to make those kind of predictions. But what I'll tell you is this, I'm putting skin in the game because I see opportunity now, even though they dropped their dividend. Now remember, none of this is investment advice. This is nothing more than you seeing the world through my eyes and what I'm thinking about doing. That ETW trade, I'm actually thinking about doing it because I really do believe we're going to come out of 2022 into 2023, picking up a little bit of momentum in the market. And with that closed-end fund being a buy right closed-end fund, they're going to profit from the higher call premiums and probably a higher stock market, which means the shares they buy to write the covered calls, they might be able to make some stock appreciation on those shares as well. We'll see. At the end of the day, it's just something to keep on your radar to expand your financial education. And remember, if you could start generating with a portion of your portfolio monthly income, that is that monthly income stream that keeps funding the good life, right? Now, let's talk about the stock. And it happens to be Dutch Bros. Now, the reason I'm talking about Dutch Bros is because 1, I own them. 2, I own them higher. And I have a poor man's covered call, Leaps call option that goes into next year, October of next year. I'm going to have Dutch Bros in my portfolio for the foreseeable future. Now, what I like about Dutch Bros right now is this. With the market stabilizing. Remember, this was a SPAC play, and most SPAC plays have been crushed, right? When we think about all the SPAC plays out there, man, I'm telling you what, they have gone from all-time highs to damn near all-time lows. But when we look at Dutch Bros, who, by the way, have real brick and mortar coffee shops, gourmet coffee shops, little different than Starbucks, right? They're largely based on the West Coast. They have such a fan base, right? I know this. People love their Dutch Bros. Well, it's largely drive-through. And what I'll tell you is this, man, they are top notch when it comes to customer service. Sometimes I drive to a Dutch Bros and I want them to stop talking to me. I know, it sounds crass, but listen, they are a company that knows how to treat their customers right. They have a very broad product base. I'm telling you what, man, my oldest son goes there all the time, not for coffee, all the other drinks. Now, I know nothing about their plans for expansion outside of the fact that they want to grow the business. And they're going to grow the business. And I'll tell you what, they're going to do it smart. They're not going to do it like Dunkin' Donuts did or a Krispy Kreme. Dutch Bros management seems to know what they're doing. Now looking at the stock price, and we've talked about Dutch Bros in the past, and when we did talk about them, I talked about how they've built a base. Now, yeah, I don't like the fact that it rallies and falls, and it hasn't rallied more. See, I actually thought Dutch Bros should be in the 40s, 50s. Its value should be not as a SPAC. Its value should be it's a real player in the coffee business, the coffee shop, the gourmet coffee shop business, like Starbucks, right? And if you think about it, there's not much competition. There used to be Pete's, right? There used to be a Starbucks on every corner. Look, that's not the case anymore. Starbucks is closing places. And Pete seems to be gone. I'll tell you what, Dutch Bros might have found itself in the perfect spot. A stock market that has already peeled off considerably. They have weathered that, and look what we get. We start to get normalized trading. Ups and downs, ebbs and flows with the stock market, right? There's no news that has come out that has caused Dutch Bros to fall through the floor. So this is what I like. I like this steady trading range. And we've talked about this. So with Dutch Bros now trading at $30, now granted, it has traded lower when the rest of the market got crushed. But for the most part, look where it trades. It trades in that high 38, 39 range, and it dips down to about that $30 range. Yeah, although on a percentage basis, that's quite a bit, but it seems more manageable, doesn't it? Right? It's not like NVIDIA where I buy in at 180 and the thing falls to 170 and I feel crushed. No, this thing trades in this nice, easy swinging range. And it just recently hit 39 and the market peeled off. Guess what? Dutch Bros peeled off. Now, with that said, people are out there shopping. I'm thinking, hey, they're getting their Dutch Bros. They're going to go shopping. So if anything, I think Dutch Bros will have a nice quarter. And I think they came out and said that 2023 might be challenging. Who isn't saying that? Right? The stock market trades this year not based on company news, if you're asking me, unless somebody big like Apple, Google, Microsoft just absolutely shocks the market to the downside. I think what we're going to get is Wall Street realizing that the Fed's going to handle this whole inflation thing and markets could stabilize, which I think they are now, and we just trade sideways to higher. So what does that mean? Sideways to higher? That means Dutch Bros trades in this range. So right now, Money Monday, what are we talking? We talking about buying shares? Actually, I'm not. Let me show you the trade I'm dialing up on Dutch Bros that I love. It's a 7% 30-day trade. Of course, you know the deal. I'm not recommending this. This is on my radar, and I have shares, for which I'm down, a Leaps call option, for which I'm down. So, I'm kind of promoting Dutch Bros here, but I'm not shilling. At the end of the day, I see this as a profit opportunity if I get involved. So what would I do? Well, with Dutch Bros basically trading around $30, and this thing peeled off like we talked about, we're going to use the $30 strike, meaning we pony up the cash, right, to buy some of these shares at 30, knowing that this sucker's trading at its bottom of its range, and we're hoping that it rallies a bit. We're not assigned the shares. We keep the premium. We move on. Well, look at this. That $30 put. So with that said, I'm looking at the 30-day cash secure put on Dutch Bros. We look at the money, right? This would be an at the money cash secure put, ponying up $3,000 for 100 shares and telling the greater stock market, right now, I'll take your shares at 30, but you're going to pay me, right? You're going to pay me at least the mid for that. And that's what I would do. I'd put in a limit order, try to get that mid. Don't get $2.10. Hell no. Get as much of that $2.45 as you can. And then, hey, the trade is on. You've made 7+% cash on cash. We know that Dutch Bros rarely trades below 30. So if you're going to make some assumptions, right? And this is how I see it. If I'm going to make any assumptions, this is a good assumption that Dutch Bros will not trade down here. And if it does, well, we have $2 of downside protection. And again, getting back to what I said, you don't feel comfortable with that? How about you push it out to the 27 strike? You're still going to get yourself $1.10. And think about that, cash on cash. Still a great 30-day cash on cash investment. So look, I want you to do your due diligence. This is what I see. I see this all the time. I want to share it with you. It's called Money Mondays. I want you to go out now, do your due diligence. And if this fits your risk profile, let me know if you do the trade. Now, because I own shares that are down and I own the Leaps call option, that's hella down, I may not put money into this. Look, I am invested and I do not want to find myself over leveraged on one particular stock, right? Now, although I love this trade and I might do this trade, but because I'm already leveraged, I might just have to sit on the bench and watch this one. I wanted to show you what I'm watching, seeing the world through my eyes. But hey, look, this might be such a good opportunity to maybe double down on some of my investments with Bros, and we see what happens. Hey, look, if you take on the trade, please let me know.